The more you learn, the more you earn. This quote by Warren Buffett is not just advice, but a philosophy he has applied throughout his life to become one of the greatest investors in the world. But the big question is, what exactly should we learn to follow in his footsteps and achieve success? He believes that knowledge is the greatest asset anyone can have, and the good news is that it is within reach of anyone willing to seek it. It doesn't matter if you're a beginner investor or someone looking to improve their personal finances. Studying the right areas can be the key to transforming your life. But are you learning the right things? Are you investing your time in understanding the pillars that truly create wealth and success? In this video, we'll dive deep into the areas Warren considers essential for those who want not only to thrive financially, but also to become wiser decision makers. Get ready to discover what the Oracle of Omaha recommends studying, from business and finance to psychology and the art of long-term thinking. Each insight will be a tool you can apply to your own journey. If this has already sparked your curiosity, stay with me until the end, because the lessons Buffett shares are not just for billionaires, but for anyone who wants to achieve success with consistency and intelligence. He is famous for stating that the greatest investment you can make is in yourself. This advice may seem simple, but it carries a depth that transforms lives. After all, to make smart decisions and build a solid future, it is essential to master some key areas he has studied over decades. Let's explore these areas and understand how to apply them in practical ways. Warren dedicates a large part of his time to understanding how businesses operate. For him, investing is not just about buying stocks, but about being a partner in a business. Here's what he emphasizes. You need to know the fundamentals of a good business, as Buffett believes that the best companies have a solid and predictable model. One example of this is Coca-Cola, one of his biggest investments. He chose to invest in it not because it was trendy, but because he deeply understood the global appeal of the brand and its ability to generate consistent profits. The pursuit of the competitive moat is a cornerstone for him, as he describes it as the enduring advantage that protects a company from its competitors. This could be a strong brand, patents, or even low costs that no one can match. Learning how to identify this type of protection is essential for making good investment decisions. If you want to follow in his footsteps, start by studying companies you admire. Read annual reports, research their competitors, and learn to analyze whether their business model is truly sustainable. You must have a perfect understanding of accounting, as it is the language of business. Warren has said that it's impossible to make informed decisions without understanding accounting. Knowing how to read financial statements is like learning a new language, but it is indispensable for any investor or entrepreneur. For example, the balance sheet, in its essence, shows what a company owns, what it owes, and its financial health. Buffett uses the balance sheet to identify companies with little debt and large cash reserves. The income statement, also known as the P&L, profit and loss statement, reveals whether a company is making or losing money. He looks for companies that consistently increase their profits over time. And then there's cash flow, which, to him, is one of the most critical indicators of a healthy company, specifically free cash flow, the money left after all expenses are paid. You don't need to be an accountant to master these tools. There are accessible courses and introductory books that explain accounting for non-specialists. One suggestion? Start with Accounting for Non-Accountants by James Carberry. The philosophy of value investing is one of the teachings of Benjamin Graham, author of the classic The Intelligent Investor, which advocates value investing. This method involves buying shares of companies that are undervalued relative to their true potential. Among the indicators, the margin of safety is one of the core ideas of Graham and Buffett. Never pay more than a company is worth. Imagine you want to buy a house valued at 500,000 rios. If you can purchase it for $300,000, you create a margin of safety against unforeseen risks. The same principle applies to stocks. Price is what you pay, value is what you get. This saying defines Warren because he doesn't buy stocks just because they're cheap. He invests in companies with solid fundamentals and growth potential. The practice here is straightforward. Learn to calculate a company's intrinsic value. This involves evaluating its earnings, assets, and future prospects. Tools such as online spreadsheets or stock analysis software can assist in this process. He is a strong advocate of rationality in investments. Buffett believes that the greatest threat to financial success is not the market itself, but human emotions. Avoid following the herd. During the dot-com bubble in the late 1990s, he was criticized for not investing in tech companies. He stayed disciplined and avoided the collapse that followed. This episode proves that resisting social pressure can be highly rewarding. Maintain patience. For Buffett, the financial market is a mechanism for transferring wealth from the impatient to the patient. He invests with a decades-long vision, while many focus on weekly or even daily fluctuations. If you want to control your emotions, create a clear investment plan and stick to it regardless of market fluctuations. As he often says, constant learning is ultimately the greatest example of why we should never stop learning. He reads for hours every day, absorbing information about business, economics, and even philosophy. One of his most recommended practices is studying real-world cases. Read biographies of great entrepreneurs and investors. An inspiring example is the story of Sam Walton, the founder of Walmart. Analyze historical mistakes. Why did major companies fail? What did experienced investors learn from financial crises? Warren believes that all learning is like compound interest. It accumulates over time and has an exponential impact. These areas of study, when thoroughly explored, create a solid foundation for better decisions and more consistent results. But don't worry, we're just getting started. Buffett is living proof that financial and personal success doesn't require extraordinary genius, but rather discipline, patience, and unwavering commitment to simple principles. He shows us that anyone can achieve transformative results by focusing on what truly matters and avoiding the distractions of the world around us. His greatest legacy is teaching us that true wealth is not just about money, but about building something lasting, staying true to your values, and embracing each day as an opportunity to learn and grow. Today, you have a choice. Continue on autopilot or adopt a long-term mindset, starting to make conscious decisions, both in your finances and in your life. Small daily changes can lead to extraordinary achievements. And if these lessons inspired you, take a moment to like this video and subscribe to the channel. This way, you'll ensure you're always connected to content that can transform your perspective on investments and success. See you in the next video, where we'll continue learning together to build a more solid and prosperous future.